COAI Coin, also known as Coimpora AI, became one of the most talked about tokens in the AI-based crypto sector after its dramatic pump that caught the attention of both investors and skeptics across the digital asset world. In an era when artificial intelligence and blockchain technology are merging rapidly, COAI positioned itself as a bridge between decentralized networks and intelligent machine learning systems. This strong narrative provided fertile ground for hype, and in the volatile crypto market, hype often translates into price action. What began as a subtle upward drift in trading volume soon turned into a massive parabolic rally that many would later call the COAI pump. The story of this surge is not just about one coin's price increase, but a reflection of market psychology, social media influence, and the speculative heartbeat of the crypto ecosystem. In the early days, COAI's vision was marketed around creating a decentralized ecosystem for AI agents that could interact, learn, and execute tasks collaborative on-chain. This positioned the token perfectly within the two most powerful trends of the decade: AI and Web3. For weeks, its developers and early supporters had been quietly promoting updates about partnerships, protocol enhancements, and upcoming exchange listings. While the market was largely quiet, early insiders and savvy investors began to accumulate positions, believing that the AI narrative would soon reignite. During this quiet accumulation phase, small but consistent purchases began to shift liquidity zones upward. Technical traders watching the charts noticed an unusual stability forming around key support levels, a classic sign that someone was building a large position beneath the radar. The stage was being set for something big, but few outside the inner circles understood what was coming. As the weeks passed, snippets of news started surfacing on social media. Anonymous Twitter accounts hinted at major announcements and AI partnerships that could change the industry. Telegram and Discord groups filled with speculation, screenshots of potential price targets, and predictions that COAI could be the next big thing. This whisper campaign created curiosity and fear of missing out, perfect psychological fuel for a pump. When the project's developers dropped a vague teaser about an upcoming update to their AI orchestration module, retail traders began to take notice. A slow but visible rise in trading activity began, with daily volume increasing by 10% each day. Analysts started to draw trendlines showing a potential breakout zone. Once the price reached this level, momentum traders and automated bots triggered buy signals, pushing the token higher within hours. Then came the ignition. A large coordinated buy wall appeared across several exchanges, absorbing sell orders and propelling the price above the long-term resistance level that had capped it for months. In trading terms, this was the moment of breakout point where early accumulation turned into mass participation. Within minutes, COAI's price shot up by double digits. Traders on Binance, Bybit, and decentralized exchanges began to notice the spike. Social media exploded with posts showing green candlesticks and skyrocketing charts. Crypto influencers began tweeting about it, YouTubers rushed to make AI coin exploding videos, and Reddit threads filled with excitement. The price increase became self-fulfilling. The higher it went, the more people wanted in. On the day, COAI was reported as one of the top daily gainers on CoinGecko, showing a massive surge of over 90% in 24 hours. The market frenzy reached full speed. Momentum traders thrive on volatility, and COAI became their playground. Large buy orders, some automated by trading algorithms, kept the price moving vertically. Each breakout above previous highs triggered new entries, and each pullback was aggressively bought by enthusiastic retail investors. For our charts, analysts pointed out fair value gaps and unfilled zones that the price jumped across without building support, indicating an unsustainable pace. Yet, in the middle of the hype, logic had little room to breathe. People who missed earlier pumps of AI tokens like Fetch, AI or Singularity were determined not to miss this one. Influencers with thousands of followers posted technical charts predicting that COAI could hit one within days. Binance's community page even featured optimistic analyses suggesting entry points around 0.47 with take profit levels of 0.75 and 1.0, further boosting confidence that the rally had more room to grow. As prices soared, social media turned euphoric. Telegram groups renamed themselves to COAI Army, and memes comparing COAI to the brain of Web3 flooded the internet. This was the emotional peak when rational analysis gave way to herd mentality. Traders stopped asking what the token did and focused only on how high it could go. Every small dip was seen as a buy-the-dip opportunity, and bearish voices were dismissed as FUD. On-chain data showed that whale wallets, which had accumulated heavily during the quiet phase, began distributing small portions of their holdings to maintain the illusion of stability while cashing out profits gradually. This distribution strategy kept the rally alive while transferring risk from insiders to newcomers. It was the classic setup of a pump: create a strong narrative, ignite retail excitement, and exit silently while prices are still climbing. The parabolic move continued for several sessions. COAI printed new all-time highs one after another. Candlestick charts showed long green candles with tiny wicks, meaning buyers dominated every session. Daily trading volume multiplied, crossing into hundreds of millions of dollars. Exchanges started highlighting COAI on their trending lists, bringing in an even larger wave of retail participation. For a brief moment, COAI seemed unstoppable. But in every parabolic chart, the seeds of reversal are hidden within its own success. As price gains become exponential, buyers thin out. There are only so many people left who haven't already bought. The final push often comes from emotional latecomers, and when they run out of liquidity, gravity returns. Signs of exhaustion began to appear, momentum indicators started to flatten, volume no longer increased in proportion to price, and price candles began leaving long upper shadows, a technical warning that sellers were starting to regain control. Then came the turn. It was subtle at first. A 10% correction brushed off as normal volatility. But soon, larger sell orders appeared on the order books. Analysts spotted a few whale wallets transferring large amounts of COAI to exchanges, usually a precursor to selling. Panic slowly began to seep into chat groups. Some traders took early profits, fearing a deeper drop, while others doubled down, thinking it was only a temporary pullback before another leg up. This uncertainty created turbulence. As the price slipped below key support levels, stop-loss orders triggered automatically, cascading into a rapid decline. What took days to climb up unraveled in hours. Within 24 hours, COAI's price retraced a significant portion of its gains, shocking many who thought it could only go higher. The psychology of the market shifted instantly. Euphoria turned into confusion, and confusion turned into fear. Traders who had been boasting profits the previous day began questioning whether they should hold or sell. Social media sentiment flipped. Once bullish influencers went silent or deleted their posts. Rumors of insider dumping and manipulation started to spread. The COAI team released statements emphasizing the project's fundamentals, promising more updates and new integrations to reassure holders. But the momentum had already broken. As confidence evaporated, price continued to fall, eventually stabilizing near its pre-pump levels. The same rapid speed that had taken it to the moon now brought it back to Earth. After the crash, the COAI market entered a long period of consolidation. Daily volatility shrank, trading volume dropped, and the number of active social media mentions decreased sharply. Traders who bought near the top faced significant losses, while early accumulators had already exited with huge profits. Some die-hard supporters continued to hold, believing the long-term potential of COAI's AI-driven network could eventually justify the valuation. Meanwhile, skeptics labeled it another pump and dump, a coordinated manipulation disguised as innovation. The truth likely lay somewhere in between, a mix of genuine market excitement about the AI sector and opportunistic trading behavior exploiting that excitement. The COAI pump highlighted several timeless lessons about crypto markets. First, momentum can drive extraordinary short-term gains, but those gains rarely sustain without fundamental growth. Second, narrative felicity, those tied to hot sectors like AI, can amplify price movements far beyond their intrinsic value. Third, social media acts as both amplifier and accelerator. Once the hype machine starts, it can create an echo chamber of bullish confirmation until reality forces correction. For traders, the lesson was clear: be early during accumulation phases, not during the mania. The ones who bought COAI quietly when no one was paying attention made the real money. Those who chased green candles at the top paid the price. From a broader perspective, COAI's story is a case study in how modern crypto pumps unfold in real time. They no longer rely solely on coordinated groups or direct manipulation, but evolve organically through the intersection of hype, algorithms, and viral consent. In the COAI case, its alignment with AI and Web3 created the perfect storm of narrative strength and speculative appetite. Traders searching for the next big AI coin saw COAI as a ticket to early wealth, and that belief alone was enough to move billions in market cap temporarily. Yet, without sustained development, technological milestones, and transparent communication, the post-pump phase becomes a graveyard for hope and liquidity alike. Still, not all was negative. The pump brought unprecedented attention to the COAI project, drawing in developers, investors, and collaborators who might not have noticed it otherwise. The influx of new liquidity gave the team resources to advance its roadmap, improved tokenomics, and established partnerships with other AI protocols. Some analysts even argue that while the initial surge was speculative, it provided a necessary catalyst for the project's growth. Others remain cautious, insisting that such volatile spikes often attract regulatory scrutiny and erode trust. Whether COAI will rebuild or fade remains to be seen, but its story has already entered the lexicon of crypto traders as a symbol of how quickly fortunes can rise and fall in the age of algorithmic markets. Looking back, the COAI pump wasn't just a market event, it was a mirror reflecting the collective psychology of modern investors. It showed how narratives can turn into catalysts, how community enthusiasm can substitute for research, and how easily optimism can become overconfidence. It also underscored the thin line between visionary investing and reckless speculation. As AI continues to revolutionize industries, coins like COAI will likely keep repairing at the center of attention of new projects promising to redefine intelligence on-chain, each potentially triggering new waves of hype. But for seasoned traders, the memory of this pump serves as a reminder that every parabolic rise has an equally powerful gravitational pull waiting at the other end. In conclusion, the story of COAI's pump is one of ambition, excitement, greed, and inevitability. It encapsulates the energy of the crypto space and ecosystem where innovation and speculation coexist, where dreams of financial freedom collide with harsh lessons in volatility. For some, COAI was the trade of a lifetime, for others, a costly lesson in timing. Either way, its legacy as one of the most dramatic AI coin surges of its time will remain a reference point in discussions about how crypto markets behave in the presence of powerful narratives. Whether you see it as manipulation or momentum, genius or gamble, one thing is certain: COAI's pump showed, once again, that in crypto, stories move prices before fundamentals ever do.